Hey guys, what's going on? Welcome to the video. So in this one, we'll be going over what happened on Friday to cause the massive drop in stocks and what possible scenarios can play out next. And then we'll be going over a few long and short trade ideas for the week ahead. Let's go ahead and get into it. So this week, the Fed had the annual Jackson Hole meeting on the economy with Powell giving the takeaways in his speech on Friday, and the market was not pleased. Powell stated that this is no place to stop or pause the Fed's tightening, and their number one focus continues to be reducing inflation. So the market initially popped on the news, but once the dust settled, it started absolute violent selling down all day on the market on Friday. So my personal takeaway from this is that it was nothing that the market has not already heard, but the way that the market reacted to this means that the market was pricing in a chance at an actual Fed pivot, and that bet on the Fed pivoting was shut down immediately by Powell during his speech, which led to investors running for the exits. So the number one most important thing is how the market reacts, and what the action said on Friday was that this changed things for the market's outlook. My opinion does not matter. Your opinion does not matter. Only price pays, and the market is saying this just changed things on the outlook. Take caution now. So taking a look at the S&P's price action in the last week, it gapped below the 417.5 key level on Friday, which was those June highs, and consolidated between 417.5 new resistance and 412 support through Thursday. So Friday morning, it had a false breakout to the upside before falling back within the range. And once 412 was broken, a waterfall of more selling came in. And this was heavy volume selling. And this is rare to see a day like this, where it was essentially straight down without much of any bounce throughout the entire day. Zooming out to the daily chart, the key range that I was watching was the 406.7 to 417.5 range, where price has respected those as major levels over the past few months. On Friday though, it cut through the entire range and closed below the 406.7 level, which is a very bearish look moving forward in the short term. So the key thing that I'm watching next is the 50-day moving average, which is the gray line on my chart, and this is like the line in the sand in my mind. So in July, breaking above the 50-day is what changed the entire trend in the market back to short-term bullish, and breaking back below it in April is what resulted in triggering the next leg down for the market. The 50-day is super important to hold for the market, and if it was to break and hold below, in my opinion, that could send the market and put us at risk going back towards to retest lows around 370-ish, or result in another leg down if those 52-week lows were to break in the low 360s. So the biggest thing that I'm watching for the broad market this week is if that 50-day gets tested, can it hold as support? And it's currently at about 398.5. So another possible scenario that could play out from here, and this is a bullish scenario, is like what happened in the bear markets of 2011, 1990, and 1974. Taking a look here, in 2011, it built a bottoming base before breaking out to the upside, and then a violent pullback that made a higher low before following through to the upside and going on to make new highs. Same exact thing happened in 1990. It built that bottoming base, broke out of it, and then had a violent pullback that resulted in a higher low and then took off to new highs from there. And finally, same sort of thing in 1974. It bottomed, broke out of the range before a large pullback resulting in a higher low, and then fully bottomed from there, breaking out to new highs. And here we are on today's chart taking a look. We've built that bottoming base from June to mid-July, recently broke out of it, and now are in that violent pullback phase. If this results in a higher low, could the exact same pattern play out like we saw in those historical bear markets? It is certainly a possibility to keep a close eye on, and would imply a bottom for the S&P around 3,900 or 390 on the SPY, based on those historical retracements. And history does not always repeat itself, but it does often rhyme. So this is a very interesting scenario that could play out to keep in mind and keep watch on if it was to happen. Alright, so now let's take a look at a few trade ideas for the week ahead. So first off, taking a look at a bullish setup that I'm keeping an eye on. This is Daqo New Energy, ticker symbol DQ. So the energy sector has been hot, and DQ has been consolidating for over 10 weeks within the same range, forming a handle in the broad cup and handle pattern as well. So on Friday, which was a bloody day for the broad market as we know, DQ showed some massive relative strength on heavy volume and is starting to break out of this wedge/consolidation pattern. The weekly chart makes the setup look even better as the cup and handle is playing out. This is one that I'm watching this week for follow through to the upside, with targets above at $77 a share and then 80, the key historical level. If it is able to break and hold above that 80 level, it would trigger the full cup and handle breakout and potentially see much more upside from there. And entering this, if we do see follow through, I'd have a tight stop loss below 69 to 70-ish, which is the previous resistance of the wedge. And if it was to be tested, that is the level that you would want to see act as support and not go back below. Alright, so next up, let's take a look at a few bearish setups that I'm watching. These can be trades for either shorts or put options on. The first one that I'm watching is the ARK ETF, ticker symbol ARKK, which is breaking down from its bear flag pattern, which is well shown on the weekly chart. If things get really ugly, this could be headed towards COVID lows at around $33 a share. Zooming into the daily chart, we can see that it broke down, tried to balance, but rejected hard off the 50-day moving average and looks set up to go lower from here. Potential downside targets are at $40 a share, $37, $35, and then $33, with a good place to have a stop loss above the 50-day moving average where it reversed on Friday. Also, an easy way to play this can also be using the inverse ARK ETF, ticker symbol SARK. There was also some major bearish option flow that came into ARKK on Friday with a couple $1 million plus bets on puts. Tesla stock, ticker symbol TSLA, is another setup that I'm watching closely. It's been consolidating in the same range for over 4 weeks now, and historically stock splits have turned to sell the news events after it happens, and as we know, it had the 3-for-1 stock split this past week. This is one that I would look to trade to the downside on if it breaks below the bottom of the consolidation range of 280 to 286. On a break below there, my downside targets would be the 50-day moving average around 265.7. The next target below there would be 263.8, and then 251 if it was to break below both of those levels. The setup is looking bearish overall, as it's now below the 200-day moving average, and the broad market is rolling over, which Tesla usually follows with higher beta, aka if the broad market is dropping, then Tesla will often drop a higher percentage. And one more thing that I wanted to talk about again is the biotech sector, ticker symbol XBI. We talked about this last week as a sector to watch at the previous $85 breakout level as new support, and it is testing that level now. If the broad market sees more downside, which is the most likely scenario at this point, then this support will likely break and XBI will see some more downside. But this is one of my closest watches right now for when there is more confidence that a true bottom is in. So it bottomed around $63 a share, which is the same level where it did in 2020 and 2018 for a long-term triple bottom pattern. Valuations are very attractive in this sector as well, and there is a massive long-term opportunity as new biotech products are being developed while we are in this bear market. MarketSmith currently ranks biotech as the number 5 industry group out of 197 total based on price strength off of lows, which gives it real potential to lead the next bull market. So riskier play, but something that I'm looking to do is to be a big buyer of ticker symbol LABU, which is the 3x leveraged biotech ETF, and hopefully ride it through the next bull market, because if this sector is one of the leaders, which I am personally speculating that it will be, this play has massive potential. For example, in the 2020 bull market, LABU bottomed at $12 a share and hit highs at $185 a share for a 1,400% gain. 3x leverage ETFs are highly risky, and you never want to be holding one of these on the way down, but a play that I personally love the risk reward on once it makes a higher low, and or I'm just more confident in the market bottoming, as the action from Friday is certainly making me more cautious for the time being. And entering this as a long-term higher risk trade, I would have zero expectation that this goes back towards highs, just because the leverage ETFs do not really work that way. 2020 was like a straight shot up, which is a perfect scenario for any leveraged ETF. But if we do have a strong run in the market as a whole, and biotech is one of the leaders, I could certainly see this one get to the $30-$40 range, which would make it a multi-bagger from here. Though just be aware that there's going to be a lot of volatility if you are buying the 3x ETF. And an easier and lower risk move, which is probably the better move for most people, is just to speculate on the more normal biotech ETF, XBI, if you are bullish on that sector long term. So that is what I'm watching for the broad market this week, and a few individual setups that I'm watching as well. Hope you all enjoyed and provided some value to you. If so, make sure to hit the like button and subscribe button. Helps me out a ton, and I would greatly appreciate that. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts. And I hope you all have a good trading week this upcoming week. Expecting a lot of volatility, so make sure to stay safe out there. And I will catch you all next time. Peace out.